Hey guys, this is Adam from dodjit.com and this is your video briefing for Tuesday the 7th of July 2009. Now the first chart that I brought up is the S&P 500 and I have to say that the markets don't really look like they're heading anywhere, and yesterday, well really to tell you the truth, I nearly fell asleep in front of the screen. You know, I'm looking at all these different stocks and they're just bouncing up and down during the intraday session. Now, if you're a day trader, that's, this is great. You can make some money out of that. But if you're not a day trader and you're more of a swing trader or you're a longer term trader, then this market has really become a little bit boring. Now, what I want to do in this session, we're going to run through quite a few charts in this session. And what I just want to show you is something that we are playing, and this is something that we tend to do in a ranging market, which is something that we're in at the moment. And basically what we normally tend to do, it's really simple. We just play off our support and resistance levels, like here. We can see that we've got this major resistance up around here. We've got this support level roughly around here. And we were talking about this head and shoulders pattern. If you look carefully at the chart, you can see we published this also on our weekly report. You can see we did break down below our neckline. We came up to massive support, the 200-day moving average. We just bounced off of that. Those of you that we were trading the intraday session yesterday could have got a nice rally off of this. We did mention about this. Now, if you look carefully on all the charts, you'll see that roughly we're starting to receive the same kind of situation. And the problem is that most of the stocks, also currency pairs, they're becoming a little bit stagnant. And is this good for traders? Is this bad for traders? Well, basically, you have to adapt your trading strategies according to the market conditions. Believe me, I've asked the market several times to try to do what I want them to do, and it just never happens. So basically, work according to support and resistance. Let's just flip through a few different charts now. You can see that the S&P 500, the broader market, is really ranging at the moment. Let's just jump over to the Nasdaq. This chart is the Nasdaq. You can see it's the Nasdaq 100. You can also see here that we've come down. We're bouncing off now our 50-day moving average. If you look carefully, we've also got this range roughly around here. Doesn't look like it's going anywhere. We could receive a little bit of a bounce today higher. Really looks a little bit boring at the moment. Let's just continue to flip through the different sectors. The financials, this is XLF. Financials look the same, ranging market. You can see that the two moving averages have crossed, but doesn't really look like we're going anywhere at the moment. We're still consolidating around $11, $12. We could drop a little bit lower. It does look like there's still signs of weakness around here, but basically I don't see any massive selling pressure, and if there is going to be any selling pressure, obviously it's going to be on a broader market, on a broader scale. I've now flipped over to XRT. This is the retail sector in the US, obviously. Again, you can see we're in this type of ranging pattern. We've got our top resistance level around here, got our bottom support level roughly around here. We did break out. We received this false break around here, then we received this dodgy like candlestick and just climbed back into our range. Again, we're coming close now to the 26th level. I don't know. Don't look for any surprises, any breaks. Obviously, if we're going to receive a break to the downside, we're going to need this to happen on all the major sectors, on all the charts that I've just shown you. This next chart is semiconductors. It's $SOX. Now, for those of you that don't know the symbols, this is a great chance at the moment to also learn the symbols of the different sectors. Look at this yet again. It does look like we're still drifting higher. You can see that the chart since March has just been climbing higher. But does this mean that now we're forming a lower high? I don't know. I think it's a little bit too early to state anything like that. But it does look like we're starting to range also on this sector, especially. Also, the Nasdaq. It's not really climbing that higher. So, they all do tend to correlate one with each other. So it does still look like we're ranging around 260. What I'm doing now is I'm going to just flip over to a few heavyweights. We're going to see how they're also acting in the market, because the heavyweights normally tend to lead the market. Look at this. Google, not really going anywhere. We did cross our 50-day moving average. We bounced higher yesterday, but if you look carefully at the chart, you can see that this is all happening around prior resistance, support. Is this going to form support around here? Really depends on the market's direction. Doesn't look like we're going anywhere. Throughout the whole of June, we were really just consolidating. McDonald's MCD, you can see this consolidating around this area. We did bounce off the 200-day moving average. We've got resistance around there. So if anyone's thinking of taking this as a swing trade to the upside, especially due to this candlestick yesterday, I would wait for a break of this level here, and then obviously you've got your target roughly around here. TNT is not really going anywhere as well. You can see we've got this box situation roughly around here. Trading around the 25, 24. Like I told you, we're in a ranging market at the moment. It doesn't look like we're going anywhere. And if we're going to receive a breakout, so we're going to receive a breakout on also all of the major stocks. So keep an eye out on these different things. Let's just show you one more stock. This is American Express. You can see we are really ranging here. Now we've come close to our gap. You can see, and it's holding above the gap level, which is roughly around here. So I'm looking, this could actually be a nice setup, to tell you the truth, because if you look carefully, we did bounce off our gap level roughly around here yesterday. Now we've got this trend line coming down roughly around here. It's quite small. So if we are going to break it, we're going to climb to the 24 level. Yeah, it could be a potential swing to the upside. Again, you've got resistance of the 50-day moving average. You've got then your levels roughly around here like that. If you're looking for a swing trade, some short plays, so then yes, this could be potential. You've got increasing volume roughly around here. Could be interesting. Again, you are in a ranging market, so I wouldn't build up too much on these positions, especially if you're trading longer term. Now the last few charts that I want to show you are some Forex charts for any of you Forex lovers out there. Regarding the charts, also they look very, very similar to the stock markets at the moment. We've got these ranging patterns going on. If you look carefully at the Euro US dollar, this is a daily chart. We did break our trend line going up. We have formed our lower high. This is something that you want to take into consideration, but we're not really plummeting lower, which makes me think that we're probably going to head into range like all the major indices. The pound against the dollar, we've just quickly flipped over. We've only got a few minutes left, and you can see also we've got this major resistance roughly around here. We have got this support level roughly around here. We're trading around that level right now. We're going to see if it's going to break out, but even if it does break out, is the trade potentially worth it going into it as a short? And the reason for this is because we have got this support level roughly around here. If you're trading short term, again, looking for 100 pips, something like that, so then yeah, this could be a potential trade. I don't think we're going to break out. I think we're going to bounce higher, especially if the markets continue to range. Another chart is the US dollar, Canadian dollar. Look at this chart. Now we did post this signal on the site that we came roughly, no, let's just sort that out. 1 second. We came roughly like this down. We did break. Now we were expecting this to plummet lower, and it didn't plummet lower, and it broke our trend line resistance. The problem is it's not really climbing higher. You can see that it's really started to range around this area, and this is just acting according to the overall market. The dollar really is going nowhere. So if you're looking for something to the upside, I wouldn't get your hopes up at the moment. It does look like we're going to continue to range on this as well. And if we're going to continue to range, then we've got our highest level here. We've got our support level roughly around here. Looks like we've got our roughly around a 200 pip range on this, on the US dollar, Canadian dollar. Let's just flip over to the last chart. Let's see if we can get this in. And the last one is the US dollar against the Japanese yen. And the reason I'm showing you this chart is because we are now starting to come close to a major support level, which is this one roughly around here. So keep a close eye out on this. If we don't break to the downside, so we could receive a nice bounce around this area. We've got our trend line like this. We could start to consolidate a little bit around this area, and then if you're looking to take this to the upside, watch for a break of the trend line. To the downside, watch, we did receive these false breaks around here. You've got your resistance levels, you've got your support levels. Just play off of them at the moment until we receive a clearer direction in the market. My name is Adam from dodjit.com.